Right.
Good morning, good afternoon, good day, wherever you're joining in the world. And thank you for joining us live for our webinar focused on understanding foreign exchange risk in the experience sector. My name's Katie and I'm joined by my colleague, Chris. Hi, Chris.
Morning all, or afternoon, depending on where you are. Nice to see you all. You can see we have got a few people connected, which is great. So hopefully this will be interesting, an interesting discussion today for you guys to understand a bit about what we do and the FX market within the industry for you.
Yeah, thank you, Chris. And look, we will try and keep this as thrilling as possible as you can with currency. And before we get started, I'd just like to share a little bit more about who we are and what we do. So Currency UK has been a 20-year boutique foreign exchange specialist company in the heart of London, specialising in international payments and foreign exchange for individuals and businesses right around the globe. And we're here, we exist to make it easier and more effective for clients to access foreign currency at the best cost, and we're here to also reduce risk. Chris, can I just ask you to mute?
Absolutely, I'll do it now. 1 second.
So just a little bit more about who we are and why we're here today. My name is Katie Keith and I'm Head of Partnerships for Currency UK, and I'm absolutely delighted to be leading on the Experience UK partnership, which is very special to us as we enter into this sector to further understand how we can support you in your business. I'm also joined by my colleague, Chris Jackson, who is Head of Corporate. Chris is going to be joining us today to give us an update on currency volatility, what next in currency, and he's also going to give us a lesson on hedging as well. So that will be quite interesting, and I look forward to bringing Chris into that mix a little bit later. In terms of our agenda today, we're going to talk a little bit more about our partnership and with Experience UK and the importance of that. We'll also go through a little bit more about the risk associated with currency and your business in the experience sector. We'll then bring Chris onto the virtual stage to talk a little bit about currency volatility. What is that? What next? And also we're going to touch on the solutions that we offer that can tie into helping you manage your currency in your business. We'll do a small lesson on hedging, and then we'll close off with top tips, what to think about. We want to keep this as simple and effective as possible for you. And then we'll open up for Q&A at the end. So we hope that you find this highly beneficial for your business. Without further ado, we'll get started. And I'd like to talk a little bit more about our partnership with Experience UK. You know, Experience UK are absolute leaders when it comes to the experience economy and helping you to navigate these international business waters in terms of bidding, gaining new business, accessing resource. And we come in as a partner to strengthen that support that they give you in this community. As companies based here in the UK, you are often required to bid for projects offshore. And a part of that is exposing you to currency risk and volatility. So Currency UK has joined forces with Experience UK to add value through education, support, and servicing you to make it simple and easy. Now, I went to the Johnny Walker experience earlier this year, and I had a fantastic time speaking to members of Experience UK, understanding what makes you tick, what you do. And afterwards, we went out to this great little bar in Edinburgh, and I took this photo. And it just reminded me of just how crazy managing international business can be. You can end up in a ball pit in no time, and it can be very difficult to get out. So hopefully through our partnership, we can serve as a lifeline to simplify how you access your currency needs and make it a little bit easier for you. So understanding foreign exchange risk for the experience sector, based on what I've heard from you in terms of our conversations we've had, the industry events we visited, the research that we're doing, and the clients that we're actually servicing in this community, there were 4 key themes that came up in terms of where you are exposed to currency risk within your business. The first one is winning the business, and I'm going to go through that in a little bit more detail. The next 2 parts are more everyday transactions, so invoicing, whether you're receiving or sending funds, you might even be processing a payroll on a regular basis to staff offshore. And then the other one was investment into the business. And that could be you're purchasing a new piece of technology or equipment. You might be investing into software and frameworks in your business. Either which way, each of these particular events in your business do carry some weight behind them and expose you to currency risk. Now, when you're winning the business, it could be any time from when you notice that there is an opportunity to bid for a piece of business offshore, or you might be going through the contracting phase. But there are certain elements where you are going to be exposed to risk, and a bit of forward planning will go a very long way. For example, are the currency pairs in the region that you're looking to do business compatible? Are you going to have any setbacks with the financial services systems that you're dealing with in the country of origin where you look to do business? Is there much going on in the currency markets that's going to stir up a bit of volatility at the time you need to transact on your international bid? Those are the three sort of areas where you need to be doing some forward planning. Now, when you move into the everyday part of your business, invoicing is something that we see on a daily basis, and Chris will tell you it's our bread and butter when it comes to supporting businesses, the daily operations and the costs that come with it. Now, what we notice about these particular transactions is the currency pairs tend to change depending on the regions you're dealing with, and you could be paying 6 or 7 different currencies at any one time in a month, which can become quite complicated when you're trying to monitor when's a good time to transact on these currencies. Also, you might be just doing it as you receive the invoice, and you might also be treating this as everyday banking. Now, foreign currency is not everyday banking. There are some things to take into consideration. If you've got regular invoicing that you know is coming up 3, 6, 12 months down the track, you can actually put measures in place to reduce your exposure to volatility. Also, plan ahead in terms of how much you want to spend and when you want to spend it. In particular on payroll. Payroll is really interesting. You know, we have a pretty good idea of how much we're going to outlay in payroll for the next 6 or 12 months. So solutions such as hedging and forward contracting are really great options to plan ahead for in these realms. Just to recap, paying invoices is not to be treated as everyday banking, and you are at risk of spending too much if you do it like that. So you are at mercy of the cost of the bank in terms of fees, and also the exchange rate, and also the volatility in the market. Moving on to the next area where we identified could be a key aspect of your business: buying equipment, investing in the latest technology. You need to stay ahead of the game in terms of how you perform in your industry, and you need to invest and continue to invest in your company. Now, that doesn't come without cost. And what we do notice is that a lot of our clients who are investing in their business are typically investing in products or solutions that may be outside of the UK. Now, as a UK-based business, you may be sending money abroad to pay for such investments. Now, often when you're looking to invest in equipment or technology, you're going to be doing some forward planning around this. So any lead time that you have in from the time you're researching this to the time of purchase is a great opportunity to start investigating what currency you need to spend, when you need to do it, what's happening in the market. Can you plan ahead? Can you purchase the currency at the right time? Do we need to put limit orders in place? Watch the rates for you. All of those things are capabilities to help you plan ahead for bigger investments in your company. Now, the risks associated with that is you don't do the forward planning. You wait till the very last minute in terms of when you're paying for the goods, and you are again at risk of the market not working in your favor. You'll be paying a spot rate, and again, if you're using your bank, you'll be attracting higher fees and conversion rates. So there are a lot of things to think about when running the day-to-day operations for business, but it really centers around 3 core components: cost, security, and the setbacks, the ease of the transaction. Are your funds going to get there in time? Can you pick up the phone to the bank and make sure that everything's all right on the other end? So that security piece is quite integral as well. Moving along, we've touched a little on currency volatility. But currency volatility can mean so many different things. And that's why I've invited Chris to join us today to talk a little bit about what volatility is, what next for currency, and what are some of the things that you need to be aware of when you're going through these events in your business, whether it's payroll, invoicing, buying equipment, or even bidding on a large project offshore. So Chris, I'd love to hand over to you to take us away on that.
Brilliant. Thanks, Katie. I appreciate the introduction. obviously, I'm going to talk to you about sort of market risks that I see at the moment. I'm not going to go into too much detail on every single little bit of micro data which could affect the markets, because obviously we could be here all day and that would be incredibly boring. But I'm just going to give a general overview of what I see are the major market risks at the moment. But before I did that, I just thought I'd sort of give you a brief overview of me and also the sort of the mentality of the currency markets. Obviously, I'm aware that I'm speaking to many different people here, and I don't want to patronize people. Obviously, if you do have any questions, feel free to put a question into the question box, and I'll have a read and I'll answer anything as we go along. But yeah, it's really just to give you a general overview of what I see as the main risks, how that affects your business, and we'll go on to talk about sort of some of the stuff that we do to help mitigate that risk for you. So first of all, my name's Chris Jackson, as you've heard a number of times. Obviously, from the picture you saw before, that's quite an old picture. I think it must be the currency markets, but I've got a lot grayer and I've had to start wearing glasses since that picture was taken. I've been dealing with FX for around 20 years. Yeah, it was pretty much my second job out of university. So I worked in insurance first for a couple of years, then went into FX. I've thoroughly enjoyed it, even though it can be stressful, and the last few years have certainly been interesting for the FX markets. Talking about the currency markets, I just want to sort of give my understanding really of or my thoughts on what drives the markets and how sort of we're all just a pawn in the big system that's going on around us, and what we can do to help ourselves in that situation. So really, firstly, the currency market is huge. You may have heard this statistic before, but according to a 2019 survey, over $6 trillion are traded on a daily basis. It makes FX the largest trading market in the world. The interesting part for me is how little of this trade can be traced back to an underlying purpose. So when I mean an underlying purpose, I mean businesses such as yourselves that will be buying and selling goods abroad, will be offering a service abroad and have to make payments on that basis, or people even buying property abroad and that sort of thing. It's a very small percentage. It's actually changed hugely over the last 40 years. As recently as 1975, up to 80% of all FX transactions had an underlying purpose. Now, a recent estimate by the Global Policy Forum has that figure at only 0.6% of all global currency trading can be traced back to an underlying cause. Now, so why is currency being traded? Well, the vast majority of FX trades are done by commercial and investment banks in what we call the interbank market. This is where banks of all sizes are trading currency with each other through the vast electronic networks that we're all part of. They do this for many reasons. It could be to facilitate their clients' FX transactions. It could be to hedge their own currency risks. It could be to diversify their own portfolios away from certain currencies. If you're a US bank, you might want to get into the euro. If you're a Japanese bank, you might want to get into US dollars, that sort of stuff. And also, a lot of it's to conduct speculative trades for their own trading desks, to make profit, basically. So what does this mean for you? Well, this is really where it gets difficult for you guys and for your businesses, because what you require in general terms when you're conducting actual real business abroad and you're having to move money for those purposes, you need stable currency. You need stable currency pairs where there's little volatility. That allows you to price your services accordingly. It allows you to forecast future profits on future deals. If you're bidding for a deal in Dubai, or you're buying some product from Germany, you need to be able to forecast how much that's going to cost you when you actually need to pay for it. So you might be buying that equipment, but you might have invoicing terms of 30, 60, 90 days. And therefore, the price that you're going to be paying for it could be hugely different based on the FX volatility. So, you know, unfortunately, this is sometimes at odds to the majority of the FX market participants. You know, volatility is your friend. It's one of the key things you hear when you start in the FX market. You know, they talk about volatility, that you can make money if the markets are moving, and that allows investors to conduct speculative bets, which obviously goes against the odds of, or goes against what you want to do with your stable businesses that are trying to trade internationally. So, you know, I guess it's cause and effect. You know, are the markets volatile because of the high speculation rates, or has the market volatility attracted more speculation? Even, I guess we don't really know why that's happened, but so that's the crux of the problem facing you guys. So I am going to talk about how we. I'm going to go on to talk about how we look at mitigating those problems. But first of all, I'll just give you a very brief overview, because obviously I don't want to keep you guys too long, of what's going on in the market, the big major issues which, you know, we're seeing. And some of this will be from a UK perspective. I know most of the businesses that we're talking to are, although conduct business abroad, are based in the UK, so there will be a certain amount of repatriation of money back to the UK, or will be using sterling on at least one side of the deal. But obviously I know that's not the case for everybody, so bear with me with that. A lot of the points are valid for everywhere in the world, because we live in a global economy. A lot of the issues are faced all around the world at the same time. So, the first thing we need to talk about is the geopolitical events that have happened over the last few years. I mean, we really have. It has been a bit of a nightmare for a number of years. You know, particularly like in the economic environment. You know, we've seen in the UK particularly the fallout from the Brexit referendum. You know, started in 2016, and it's just been ongoing ever since. We've seen, just after we felt like we were getting through that, we then saw COVID, which was an absolute disaster for everybody, and obviously massive public spending, etc. And then we thought we were coming out the other side of that, and then the Russia-Ukraine conflict dropped us. You know, really, you know, we saw COVID there was an unprecedented government spending during and after COVID. Really pushed the economy to its limits, and just as the government was hoping that we were easing through it and entering a period of steady economic growth, we were hit by the huge inflationary pressures brought on by the Russia-Ukraine conflict, and the sharp rise in energy prices. So obviously, you know, that's still ongoing. You know, we're still monitoring that, and this actually leads into my main point and the main thing that we need to be keeping an eye on, and that's to do with interest rate and inflation. Now, I know that you're all hearing about it in the news every day. They're talking about inflation, you know, the price rises, etc. But it's really, really important in predicting the course of the FX markets. In general terms, higher interest should really be positive to an individual currency, as investors see it as an opportunity to gain greater yields from holding money in that currency. You know, it's like if you've got a savings account and if you hold money in one currency and that currency yields a higher interest, then it's beneficial to hold your money. And that's what the money markets are doing. That's what treasury departments and big international firms and in banks are looking at. They're looking at which currency is going to yield the highest amount of you know, well, there's going to be the highest yield for literally holding your money in it. Obviously, that's dependent on the rates not moving, and it's very complex, but that's a very sort of fundamental reason why interest rates are important to a currency. Higher interest rates also help curb inflation, as borrowing money becomes more expensive, and therefore to keep spending up, prices need to come down. So we're already seeing that in the mortgage market. You know, inflation is incredibly high, and people aren't really taking out mortgages in the same way. So actually the lenders are starting to reduce their prices on mortgages rather than keep going in line with interest. This year, the issue with higher interest rates is that it also curbs spending and therefore slows the economy down further due to the higher cost of borrowing. it's a really delicate balancing act for the Bank of England, considering the post-COVID turmoil, which we've already seen. Right now, the base rate of interest currently stands at 4.25%, while inflation dipped from its October 22 high of 11.1% to 10.1% in March 2023. The Bank of England is reluctant to raise interest rates much higher. And that's because the UK is currently trailing the field in GDP growth out of all the G7 countries. The markets really only expect one more basis rate, 25-point basis rate hike, taking it up to 4.5% on the interest rates. But to accommodate that, we're really going to have to see inflation start to come down even further. We have actually had some manufacturing data out yesterday, which did indicate that inflation was continuing to fall. But obviously, perversely, if that means that the market expects the UK not to raise their interest rates more, they might actually see that the economy is getting a bit stronger through the lowering of inflation, and therefore that actually might give some strength to the UK. It's a strange thing, the currency markets, because sometimes they do what you're not expecting and not what the actual the sort of basic teachings of economics would expect to happen. So you've always got to be looking at the bigger picture with the FX markets. In the short term, we have interest rates decisions for both the Eurozone and the US. The US is this afternoon and Eurozone is tomorrow. So keep an eye on those things, and the next UK one is on the 11th of May. But really, any murmurings around interest rates, any murmurings around inflation, they're such key indicators that if you see anything in the papers, saying, oh, inflation is still getting higher, then you can really sort of be take a more educated view on what will happen to a certain currency, because it will affect what the interest rates are doing and how the economy is performing. So the next thing I would always sort of look at as well is just global economic conditions. So because currency is always the only value a currency has is derived from from its relative comparison to another currency. So GBP has a certain value against another currency. It doesn't have an intrinsic value on its own. It's not like the old days where everything used to be backed off against the gold. Gold reserves in the central bank, it's all to do with how it compares versus another currency. So we have to look at the global economy. The strength of the US economy, for example, is massively important to how other currencies perform. The two most traded currencies in the world are the euro and the US dollar, and the US dollar is much more traded. It's traded against every other currency. Major currencies are defined by the fact that if they're traded against the US dollar. So that's one of the factors that makes a major currency or major currency pair. So the US dollar is hugely important. It's the world's safe haven currency, and what that means is that in times of risk-off sentiment, so if, for example, after the Russia-Ukraine conflict has started, there's a flight of investors to what they deem to be the least or the most safe currency, in terms of that currency isn't going to fail. It's not going to suddenly weaken off. It's not going to suddenly that economy that's backing up that currency is the most secure. Now, it's quite pertinent in recent times when we've had obviously the failing of some mid-tier regional US banks when they haven't had enough assets to back up the depositor runs that we've seen recently. There are rumours that there are a few more regional banks due to go under as well. So bear that in mind. But again, perversely, it does seem like when that happens, the US strengthens up because there's a bit of a risk-off sentiment. So bear that in mind at the moment when we're talking about global economic sort of conditions. And lastly, just a few domestic political developments. Obviously, again, in the US, we've got the elections coming up in 2024. generally, as is in the same in the UK, the more conservative parties, the Republicans, they're deemed better for the economy because they're more pro-business, etc. That doesn't always work out, but there is potential we could have a Biden-Trump election again, and that would be obviously chaos for the markets. So bear that in mind. And starting from today, actually, I think it is. Let me have a look. It's starting from tomorrow. Apologies, we've got the UK local elections starting. The next general election isn't due for a couple of years till 2025, but we have got. This is a great indicator. I think there's 8,000 council seats up for grabs, and although they're talking about local local markets or local sort of community issues, it's a great indicator to just see how the country is sort of viewing their political opinion, I guess, ahead of the next nationwide vote. Obviously, big wins for Labour would mean that Keir Starmer's party is sort of primed to take over, and would be a big blow to Rishi Sunak and the Tories, and vice versa, obviously, as well. And as I said, generally the markets view the more conservative parties as being more pro-business and better for the economy. But obviously, what's happened over the last few years and with Liz Truss and all that sort of stuff, that may be a little bit different at the moment. So who knows how the markets will take that. But that's really my market overview. I'm not going to go into too much detail and all that sort of stuff. I hope that's enough for you guys to go on. Obviously, any questions, please let me know.
Thanks, Chris.
Yeah.
And actually on that, Chris, just to sort of sum up, there's a lot to think about when it comes to understanding what affects currency volatility. And I'll just get you to pop yourself on mute for a moment until I bring you back.
Sorry.
But I think that, listening to you then, and, there's all geopolitical events, there's an economic update that you've provided. There's a lot of data that's fed into how we monitor the volatility, how we support clients. Now, as business owners in the experience sector, you do not have to be an expert in managing currency volatility. Chris has been doing this for 20 years. He has full understanding of the market. He's looking at the numbers all day. Plus, there are solutions that feed into your business that allow you to manage this with ease. And so you don't have to be an expert in currency, but you certainly need to have someone on your side that knows exactly what they're doing. And I think the next part of our presentation today is really just about sharing with you what's out there for you. Now, products and solutions are very much the same across the board, but it's how you manage them and tap into them that is the key. Now, look, we've got on the spot, we talked earlier about your invoicing, and you might have something that's come in, you need to pay it urgently. You'll typically log into your foreign exchange platform and you'll pay for your invoice at the spot rate, or you'll pick up the phone to Chris and pay with your spot rate. I would encourage you not to treat this as everyday banking. And also the next part of it is an agreement that allows you to take advantage of favorable rates at a future date. Now, Chris just talked a lot about the upcoming events that he's looking at. Now, these upcoming events create certain volatility in the market, which actually can work in your favor or potentially against you. So by doing a bit of forward planning, you can look at forward contracting or setting market orders, which gives you autonomy to decide on rates that you wish to receive at a minimum. So there are really solid solutions there to help you manage the risk attached to volatility. Now, there is one other solution, and I'd love to bring Chris back into the room because this is important for any business to know and be aware of, because if you're not using these types of tools in your business and there's an opportunity for you to do so, this might actually be a great checklist for you to tap into to understand why. So, Chris, I just want to ask you, what is hedging, and what can the experience economy benefit from using hedging in their business? I'd love for you to share a bit more about that.
Yeah, of course. So firstly, I'd like to say, although I am an expert, I suppose, on the FX markets, you find very few FX professionals who actually trade currency for profit with their own money. It's an incredibly difficult market to predict, and generally, my sort of nature is is conservative when it comes to risk. I'm not a gambler. I don't do gambling. I don't even do the lottery or anything like that. So it's really the view that I take to hedging is minimizing risk, and that's the way we look at it. And there can be a misconception, I think, or perception on hedging as a way to try and beat the market, to try and try and almost make bets to try and always get a better price than where the spot price is, which in my view is not the way to view it. It's purely a way of mitigating your risk and securing your profits. We aren't FX speculative traders. We don't do any speculation. You guys aren't FX speculative traders, unless you do that in your spare time, and feel free to do that if you want to. But your business is not FX, and your profit is not based on FX movements generally. It can be a nice added bonus, but it can also be a bit of a pain when it doesn't quite work for you as well. So FX hedging, in very general terms, is just a way of securing your profit that you're making from your core business activity. Now, there's a whole host of ways of doing that, and really the first thing is that we don't expect you guys to be FX experts and to be monitoring the markets all the time, because generally you're way too busy to be doing that. Now, what a company like us does is give you a professional who is almost like an in-house FX specialist for you. So they are working, first of all, to try and really understand your business and how your business works in terms of invoicing, in terms of your payroll, in terms of how you price up your deals, how you actually, what's involved in your contracts when you're going out for tender, that sort of thing, to help so that they can fully understand that process, and then sort of make recommendations to you in terms of what will be the best way or the best strategy for you to mitigate your risk. So that's the first thing. It's having a professional on hand to actually act as your FX specialist. And everyone we've got here will be very experienced. They'll have 10 plus years in the market, and they'll be really be excellent at understanding how your businesses work. We aren't an FX company that is in it just to make profit and to do that as quickly as possible. We're a business that's been around for a long time, and we're looking to continue to be around in a long time, and we want to keep growing our business by getting customer loyalty, and you do that by good service. So in terms of actual products, though, it's a very straightforward business. Obviously, you've got the spot market, which you'll all be trading in. As Katie said, it's very much like treating it as a banking service. You go in, you make your payment, and that's it. Problem is, if you've got an invoice which is due in 30 days or 60 days or 90 days, or you have ongoing payments for a project that you're dealing with, which might be a year or 2 year project, which I'm sure a lot of stuff that you guys deal with could go on for quite a while if it's a new experience that's being set up, a new theme park, etc., that sort of stuff. So what we do is we'd look at a way of hedging that product. So we look at on a basic term, we could look at things like looking at market orders, for example, which is where you say to us, I've got a period of time to make a payment. So it might be a week, 2 weeks, a month. I need to obtain the rate of 125 on US dollars. And we'll say, okay, well, the market's at 123 today, so we can't get there, but let's place an order in the market. And that allows us to take advantage of all the different movements in the exchange rate, which happen outside of work hours, happen overnight, happen over the weekend. And if you place the order, it would automatically fill at that time that the rate is hit. And that could be at any time during the night or over the weekend. So That's the first very basic thing we could do. That's not really mitigating your risk. That's just hopefully getting you to the price that you want to achieve. So it's a slightly different thing. On the mitigation side of things, the most basic product, which a lot of you would have heard of, is a forward contract. So that simply allows you to book currency for a future date or a future time period, and you don't have any sort of costs up front. So you can, unless there's a deposit required, but we won't get into that right now. But you're fundamentally booking an amount of currency to use, and we basically book it, and then you pay for it when you need to use it, and that can be over a 6-month period, or it can be over a 12-month period, or it can be for a specific day in the future. That's great. It gives you the full coverage. It gives you the full sort of you are mitigating your risk as long as that's at a price which you're happy with. But it doesn't. You are obliged to use it. So if the market continues to go up, then or go in your favor, then you are limited to using that forward contract. Now, on a basic term, I would never advise you guys to fully book 100% of your FX requirement on a forward contract, because I believe that you want to allow a certain amount to be used in the spot market. So you might book 75% of your risk, unless you've got very specific invoices. So you're paying for equipment that you need to make sure you are covering a price, because the FX markets do go up and down, and inevitably, if you've booked a forward, you might be able to get a better price at some point down the line, and so therefore you can take advantage of that by maybe booking another forward or booking some of your payments on spot. Now, the other thing we can do is we can move into the derivative product market. Now, that's very complicated, and there's hundreds of products you can use, but on a very basic level, and the most basic sort of derivative product you could use is like a forward contract. So it gives you a baseline rate coverage, but if the market moves in your favor, it will give you some upside, and there will be a cost involved in that, and that will either be an initial fee for that product, or it will be in the rate. So the rate of cover that you're getting at the bottom will be worse than it would be on a forward contract, but it will allow you some upside over a period of time. So that's the main FX risk, FX mitigation tools. So you've got forward contract, derivatives, and obviously just using the spot market and market orders. But really, it's the working together. So having an FX professional who knows the market and understands your business. Really, we're experts at identifying support and resistance levels. And this is what I was talking about with the speculation within the market, is that what happens is you see support and resistance levels. This is where people are placing these speculative orders, and they tend to bunch up around big numbers. So pound euro, it might be 115. There'll be a lot of orders, and 110 on the support side, and the market tends to bounce around between those levels. There are sort of minor support and resistance levels in between that as well, but they tend to be on round numbers. We can identify those because we've got analysts that are doing that all the time, and we can potentially get you to buy nearer those levels as well. So it's really a case of using the products that we've got, but also using that in line with our knowledge to help guide you. Yeah. And that's pretty much it for me. Sorry, it's quite long. Apologies.
No, Chris, and I really appreciate a deeper dive into those particular products and services, because it is a matter of understanding exactly what the business needs in terms of, where you're at with the business. I'll just get you to pop on mute if that's all right.
Oh, yeah. So
we're getting some feedback through the line. And so look, Thank you very much, Chris. That was very insightful. And I think going a little bit deeper today just fleshes out the knowledge a bit more for businesses, in particular, if you're listening in and you've never used a currency service before, at least you have a really good idea about the products and services that are available to you, and also the expertise and the knowledge that you need to be tapping into to understand how that's going to impact and affect your business, whether it's cost or risk. And so just to finish up our webinar today, I'd like to just recap on some of the things we explored today. We talked a little bit further about our wonderful partnership between Experience UK and Currency UK, and how we're coming in to understand more about your industry to better serve you, but also hopefully will serve as a lifeline to add more value in terms of how you interact with your offshore partners when you're doing business. We also talked a little bit about the specific aspects of risk that might be acting out within your business. So you've got your bidding and tendering offshore on projects. That poses a risk in itself. You don't want any setbacks or delays. You want to make sure that you're moving into those contracts with ease. So tap into our resource, ask us questions. How can we get involved in that? And how can we make it easier for you? Then the next part was the day-to-day, invoicing, paying payroll. And then maybe the next part was buying bigger pieces of equipment and forward planning for that. So it's never too early to start planning ahead for any of your currency exchange. You might have a trade coming up tomorrow or next week or next year. Tap into the resource that we are to add value to that. You can set yourself up with rate alerts, sign up for market updates. So what Chris provided today was a really good market update. Now, we share these with clients every single day, so they can do a 2-minute read on what's happening in the market that keeps them informed and up to date. So we do the work for you. So if you'd like to sign up for market updates, you can reach out to us and we'll put you on the list and make sure that you are aware of what's going on. Now, also, it's really important to understand where you're looking to send your current currency. Is it a valid country? Are there sanctions? What's going on? Like, make sure that you do that inspection before you sign up for any contracts or business deals that might impact you and might, in essence, lose you money. So that's, at the end of the day, we want to make sure you're not losing funds at the back end. You're working very hard to bring money into your business. We don't want you losing it out the back end. And make sure you do your research on any hidden fees and charges. I was just doing a presentation this morning to a financial planning firm, and a lot of their clients are in Europe, and it's costing them a fortune to hold their funds offshore, and they didn't know that. So it's about understanding what's actually happening in different markets and how that impacts you. What is it going to cost you? And lastly, but not least, foreign currency is not everyday banking. You really shouldn't be treating it as everyday banking. And if you are, please reach out to us, because as a part of our partnership with Experience UK, Chris and I personally are offering a completely no obligation risk review on your business to see how we can not only save you money with your foreign exchange, but also reduce any risk exposure that you're carrying right now. So reach out to us. We are a resource within the community. You have access to that risk review. We can compare transactions. We can look at your operations. We can look at what your costing is when your purchases are coming up. There is so much we can add value to. So we're here to support you. We hope that you enjoyed today's session and we were able to provide you with some valuable insight, some ideas about how to move forward in your business. And now we're going to open up for questions. And thanks so much, Chris, for joining me and for your insights today. So hopefully we've got some questions to answer. If you'd like to pop them in the chat, we will come back to you. We can answer them verbally with you now. If not, we'll be sharing our presentation. You'll have our contact details as well, and you can reach out individually. We'll just give a few moments for any questions to come through. Looks like we don't have any hard-hitting questions right now. We must have given a really in-depth overview about currency, and hopefully it's not as clear as mud right now, but if it is, please feel free to reach out for us. Thank you so much for joining us. We look forward to catching up with you at the next trade event. And we do have a question come through. Thank you, Adam. So, Chris, this is a really good question for you, and it is to do with any thoughts, risks with crypto. And I think this is an interesting question because quite often we are approached about crypto and how that ties into currency. So would you like to take that one, Chris?
Sorry, one second. I just had to take myself on mute. That's the that's a horrible question. It's a great question, but it's a horrible question. It's you know, I struggle with crypto. It's not something that I've really invested in, and obviously I know that people have done really well with it. I think so. Don't worry, Adam. That's fine. That's fine. It's not a problem. I mean, I'd be there's never exactly right. There is never a bad question. It's the difficulty I have is how unregulated it is, and how I personally feel like there's too much risk to it. It's I can understand the logic behind it, but in terms of the blockchain stuff, and I mean, I say I can understand it. It's very technical, and I probably don't really understand it, but I can understand the blockchain stuff. But I think the fact that it's not there's no government intervention allowed. There's no sort of regulation. There's no sort of authority which can sort of help devalue it or value it. It's very difficult. I mean, obviously, in the non-virtual world, like people, countries need to be able to devalue currencies and also tighten monetary policy as well. And you just can't do that. And when you get, when it's in the hands of people like Elon Musk to sort of buy and sell and influence hugely by tweets, I feel like it's just a bit too mad at the moment, a bit too it's like the Wild West, really. So I in terms of sort of risk, I think that's my sort of major concern, is that what is to stop you what's to stop that from suddenly losing lots of value like we've seen. And in terms of an investment, I can't really see it, but it depends what you're using it. Could it become more widely used? Certainly, I'm sure it could be. As the sort of virtual world continues to take off, more and more business will be done through these sort of virtual environments, and then it's the logical step is to use currencies which are virtual as well. So that's really sort of my view, but it's not too in depth. I'm not a massive crypto expert. I've never invested myself in it. So. Thanks for the question.
Yeah, thanks, Adam. And I think it's important not to ignore that it is becoming a very popular way to transact globally. And I think, but as you say, there are risks associated with any of these particular areas of doing business. In particular, crypto, very new. The risk cushion around it, so to speak, is very loose, and it's still forming, I believe. Helen has a question. Is it always better to use a currency service rather than your business bank? We have always dealt with each transaction as they occur through our online banking. It sounds like we could do with speaking with you. Helen, yes, I think that we get so comfortable with banks being our main source of financial support, and we often aren't aware that there are other solutions out there which are more niche and more expert around the area that you're dealing with. Now, I always say foreign currency works in parallel to your banking, and it's really important not to treat foreign currency like everyday banking. And I can guarantee that, based on what you've shared now, if you're just paying invoices as they come through the front door and then paying it on your banking platform, it'd be quite costly for you. So there's the cost component. And then if you're doing this quite regularly, it doesn't matter how big or small the transactions are there certain risk components around, being at the mercy of the exchange rate as well? So not only is there the cost, but there's other strategies that we can help with too. And we want to make it as simple as possible for you. So we'd love to have a chat about simplifying that for you. And yes, foreign currency should be treated differently to banking and should work in conjunction with your banking. Banks serve a real purpose in helping us to run our businesses. And the components on the outside, we come in as a stream alongside that. So hopefully that was able to add a bit more value there. Any other questions? I've had a couple of people say thank you very much. Thank you very much for joining us as well. If there are no other questions, I feel we are coming up to time. We are here to support you, and Chris and I personally work together and support the Experience UK a membership. So we have preferential pricings. We're offering a free risk review on your current situation to make sure that you are doing the right things. You know, no obligation to work with us, of course, but we just want to try and add value somehow to keep you informed and educate you on what's happening out there in currency markets. So don't delay, sign up for our currency updates, get a market update from Chris and the team on a daily or a weekly basis. We also have our newsletter. Speak to myself and Chris about what's happening in your business, see how we can add value, and tap into us as a resource, as a part of the community. On that note, I'll say thanks again, Chris, and thank you to all of you. I hope you have a lovely rest of the day. Thanks for chiming into the recording, and we'll speak to you soon.
Brilliant. Thanks, guys.